Afternoon. How are we all doing? Still in the DAX from this morning. Just about to get out. I'm thinking about getting out. It's been flip-flopping around all day, and I'm still in it. Don't know whether to shut it or hope we get a drop at the open, but should really shut it. Anyway, how are we all doing? Afternoon, Monkey, Amy, Danny, Crom, JC, Peter, Brian, Marco, Ian, Neo, Jimmy. How are we all doing? Don't know what to do. It's a tricky one, isn't it? That's my break even. I'm basically at break even on it. I've banked a whopping $2.90 this morning so far. So, yeah. Big morning. Did I close it? I don't know. Afternoon, everybody else. Jimmy. Hello to Jimmy, Alistair, Marco, Fletch. So, should I put a trailer on it? Let's put a trailer on it. Screw it. Let's put a trailer on everything. That's not going to help much, is it, putting a trailer on that? That's the point. I can only put a trailer on the top ones. Let's just get out. Let's jump ship. There's no point in holding it. So, $250 whopping dollars today. Fantastic. Anyway, there we go. You do. Hasn't gone anywhere all day. Add that to the Big Mac account. Yep. That's quite a few Big Macs in it, $250. I could eat out in McDonald's for a good month. I don't know. I haven't been to McDonald's for years. I've no idea how much it costs. Afternoon, Virginia. Nothing wrong with break even. Break even is not a loss. That's not a break even there. That's a profit. $250. So loads of news this morning. PMIs basically all over the place. Pound was positive on manufacturing, as expected on services. Euro was negative overall, but mixed bag for France and Germany. So, nutshell, this morning really wasn't a lot of anything really. We've had a good push against the Swiss franc this morning. So, as you can see, we've had a good, strong Australian dollar. Australian dollar has been the main mover today so far. The Swissy, we've had some little bit of movement against it. It's been a real mixed bag, though, this morning. So kind of stuff all over the place, but nothing really moved greatly. Pound's pulled back against the US dollar. So the US dollar's been rallying all morning, but hasn't quite got to ADR yet. So it's kind of, if you look at it, it's kind of just an undoing of what we saw yesterday. So we had a weak US dollar yesterday. We've had a bit of a strong US dollar today. So it's just kind of all in a holding pattern still. As you can see, this is day 4 now for the US dollar CAD. Just not going anywhere, holding pattern. It's the story of my life at the moment. It's just sideways, explosion, sideways, explosion. That's all we get. It's awful. Low time frame trading is all you can really do at the minute. So not really gone anywhere this morning. We've had some ADRs, which is good. We'll have a look at those in a minute. Market's going to open in 5 minutes, but as with the DAX this morning, we've got the PMI figures coming out 15 minutes after open. However, we've had a load of earnings this morning, so we're in earnings fortnight proper now. We've had 3M, Coca-Cola, General Electric, General Motors, Spotify, Verizon already today, and we've got Google, Microsoft, Snap, Teladoc, and Visa after market. So most of these have had positive earnings this morning. So if you go through the news feed, Coca-Cola hit target. Bank of Japan were talking about tweaking their yield curve, which we got a little bit of a spiky move off of, but Nothing particularly exciting, as you can see. So other than that, this morning, they've delayed the war again. There's not really anything else apart from the earnings, and the earnings are mostly positive. So Coca-Cola's good, GM is good. So I would expect potentially to get some rally this afternoon at the open, but we probably will wait 15 minutes. So we'll see. It might be a tricky one, as it was yesterday. But the only other news we've had this morning, Lagarde told EU officials the battle against inflation is going well, i.e. she thinks that the 4.5 interest rate is holding inflation as they want it to. So if you look at the fundamentals for the euro, we are at 4.3. It's coming down nicely. So, all officials would say, yes, this is very, very good. US said that when theirs was at -1%, and now we're at 0. So that will tick up, as will the Australian. So at the moment, it looks like a freeze on euro, which is what we're expecting. So the euro rate comes out on Thursday. So from what she's just said, she's confirmed a rate freeze, pretty much, without saying it directly, is as close as you can get to a rate freeze. So that's the only other news we've had this morning. Nothing much else apart from earnings. We've just had something coming from the Saudis. Wouldn't boost oil capacity without demand. So that should be positive for oil, because it's saying that we're going to continue restricted supply. So it does the opposite. This oil's acting weird again. Hopefully this is going to hold this level here. I would be getting slightly worried if we push down below this level. That today, I think, is really the line in the sand. So we've got oil inventories tomorrow, but I wasn't expecting this to come down quite as far as it is. We kind of are stalling out again. So it's a bit of a funny way to get to $100 a barrel going down for 3 days, but we'll see. So there's your news. We'll look at the ADRs in a sec. If we look at the indices so far this morning, NASDAQ, well, they're all pretty sideways, slightly bullish, but not massively. So we'll have to wait and see what happens at the open, which is about to happen in 30 seconds. So we'll watch the open, and then we're going to have a look at where we're potentially going. So this will either be a good explosive open or it won't. We'll have to wait and see. But I'm not expecting huge movement until we get those PMI figures come out. But as we've had earnings, we might just get an initial dump before the figures. And if the dump's big enough to get to target before the news comes out in 15 minutes, great. But they're tight ranges today, so I might not actually get too much on. We'll see what the ranges are like. Okay, so yeah, very quiet open. Very quiet. So no pre-market on the NASDAQ. Range is too small. Taking the S&P and already long on the Dow. So Dow's already gone for the upside. Thinking about it. S&P is rallying as well. As is the NASDAQ. So nice big rally on the NAS as well. The open. Let me just quickly check the settings on the Dow. That's why. Just realized I've got on my other terminal, I've got the look back set differently. I haven't taken the Dow on my other account, and it's because I've got a look back of 5 and not 6, and that makes the difference between the range being too big or too small. Really annoying. And that's going to be far too big to trade as a 5-minute opening range. So long on the S&P as well. Just triggered the S&P. Look at that pullback on the NAS. Blimey. Okay, so nice big strong rally on the Dow. Okay, I'm taking that off the Dow early. Just because I haven't banked this morning on the DAX. So I just want to bank something. It's probably going to hit target. There we go. So it's hit target anyway. The only reason I've made that decision there is because of that. So I would have hit target, which is fine, but it's whatever. But that massive sell order that's just come in on the NASDAQ, if we are going to suddenly drive down, and that is the leader today, we're going to find the S&P flopping down and the Dow flopping down as well. Look at the sell coming in on that. So I just got out of that early just because I was watching what was going on there, and it was a big sell. So wrong decision, but not really a wrong decision to bank $800, is it? So end of the day, it's a win. So we'll see where these go. Just going to watch this open, just see how much volume we get in on this initial move. That's going to be too big for me to trade today. So that's 513 is the range. That's 467. No, that is within range. So I can trade the 5-minute open on the NAS, assuming it doesn't drop any further. Okay, we're out the highs on the S&P. Let's have a quick look at these and where we're potentially going. So the Dow, we're looking at yesterday's high, which we're just coming up to now. So we're probably going to find some resistance at yesterday's high, some limit orders triggering there. Other than that, we're pretty damn close to ADR. And 125 ADR is the previous day's high. Once we pass that, obviously we're up into this propulsion gap. So downside on it would be looking at yesterday's low, obviously for a downside move if we get one. S&P, yesterday's high is also the target on that to the upside. My TP is just above yesterday's high. I'm just pulling the TP on the S&P down just within 2R because yesterday's high is there, target was there. If we are going to get limit orders triggering at yesterday's high, I want to make sure I'm out before we obviously get there, so before they trigger. So I'm just moving target down ever so slightly on that one. Downside on the S&P is going to be yesterday's low as well, which is also ADR today. And the NASDAQ, let's just get rid of this big box now. Bounced perfectly out of that box. Funny that. Wow. Sorry, one sec. I was going to say, I didn't trigger the order on the Dow because that range is far too big to trade, which is fine. So I haven't taken the Dow over there. The NASDAQ, look at that, 513. That candle. Maximum range, 513. So it's exactly 20% of the opening range. So we haven't taken a trade on the NASDAQ either. So not trading that today. TP's already hit on that one. Obviously, we've got the runner on. S&P is underway. So, but if you are taking the 5-minute ORB on the NAS, might have just triggered long, depending on what your offset is. So yeah, NASDAQ upside. We're looking at yesterday's high and the previous day's high, forming that resistance to the upside there. Failing that, we'll be looking at ADR, which is that propulsion gap. Fill to the upside. Downside, we've got propulsion gap. And then we've got, obviously, previous day's low, which is yesterday's low, which is down at over 100 ADR today. So long way to drop if it does reject these highs. So we got 7 minutes until the news. So second half of that is locked in, guaranteed profit. Anyway, S&P is slightly struggling because this NASDAQ's struggling to go high. So we haven't even got to the pre-market high yet. That's not even the pre-market high. The pre-market high is a little bit bigger. Pre-market high there. So this whole area basically is potential pre-market resistance. We've hit that 3 times basically. So if we do get through that level, we're going to pop straight up into yesterday's high. So that will get a nice kick on the S&P if that gets through that level. So just watch the NASDAQ here. If we break through that high, we should get a decent run on the S&P as well. Struggling. I'm going to give it this candle on the S&P. If we are struggling to get through here, i.e. if we're going to put any kind of spinning top or doji in, and the Dow, the NASDAQ is struggling to get through that high, I'm just going to close that out. Again, I'm going to close it early because we are showing signs of resistance there. And as soon as that news comes in on the PMIs, we're going to get a kick in one direction or the other. If the kick is down, I want to be out of that. And I don't want to be taking a loss on this and getting hedged because I've made a profit here. So I'm going to give this candle another minute. If it isn't going to close bullish, I'm going to close that out. Because there's no point in... Basically, it's a gamble. If you're going to let this run over news, you're gambling as to whether or not it's going to fly that way or that way. If it's going to fly that way, I don't really want to be in it. If it's going to fly that way, fine. But I'd rather miss the opportunity for it to fly that way than take a loss, because this is now locked in, this profit on the Dow. So. Okay. So I'm just getting ready to close this. If this starts to look bearish, if that NASDAQ pops though, we're going to go. Can't get through, look, NASDAQ. Trying really hard to get through, but the limit orders are triggering. The sellers are trying to put up a fight. There we go, we're through. NASDAQ's through. Terminal's frozen just as we popped. We've popped through. We're flying through. I say flying. We've got through. S&P's not moving though, look. There we go. So NASDAQ's out the highs. So see if we can hold this high. Took a lot to get through there, so might struggle a bit now, but. Three minutes to the news. Dow, I'm closing out. Well, the EA is closing out. Okay, flat on the Dow. Closing that S&P. Just going to protect that. Don't like that. That's causing that. And we've got news in 4 minutes. There's just no point in just taking a punt that the news will go our way. So that's $1,200 banked, done. if that doesn't stop out and we get news spike in our direction, obviously that's going to stop out, I think. But there's potential for a nice big win on that one, but no point risking it. There we go. Another nice profitable day. So we've got a few ADRs to look at, but we've got the news coming up. So we'll just watch the news first and see what that does. So we'll watch Euro US. Took Euro US off today, this morning. Straight in, straight out, H1 RSI extension, M5 reversal alert, nice easy in and out. So I took that off today. That hit target. So this target downside was that propulsion gap above that high. So got that one off this morning. So we'll watch the news and see which way we go. Afternoon, Gregors. What news events affect indices? I can't find anything on Forex Factory. What, this whacking great PMI news coming out at 2:45? How can you miss that? It's huge. It's basically the PMI figure is the commercial. Think of this as the commercial version of the CPI, the Consumer Price Index. This is the Purchasing Managers Index. So this is an indication of inflation in commerce, whereas CPI is an indication of inflation for everybody in the world, basically, or in the country. So this is not as important as CPI, but it is an indication of future CPI movement, because if the purchasing managers' prices are going up, your prices you pay are also going up. Yeah, so this is a precursor to CPI, which is why it's important. Not watching the charts, am I? I was watching the charts over there and just realized you can't see them. We've got 1 minute to go. Are you still using 0.1 risk per trade? Yep. Today, the EA works fine with the Dow. Really nice today. Good. Out the Dow with 1R. Yeah. I'm out of everything. I think we were quite fortunate to get that because the news, obviously, that's what I was expecting to happen. A little bit of a whipsaw before the news, but luckily we got a big enough run to actually bank some profit before the whipsaw. So good. Aircraft inventories, Brian. Yep, could be. Aircraft inventories are very important, you know. Big move down. That's positive US. I can tell you it's positive in US before the news even comes out. US dollar Swiss ADR. 50 on a forecast of 49.5. That was, I'm not sure if that's manufacturing or services. I didn't see. That's manufacturing. Services. Probably positive, I would imagine, because that was a big move. Yeah. So double positive. So 1% up on the services and 0.5% up on manufacturing. So positive US move is usually negative index. So as you can see, indices coming down, Euro US coming down, because that's a positive move. But we'll see if the market holds it, because we've had a lot of positive news on the US, which is basically just not held. So we'll see where we go. But at the moment, we've got a decent move on that. What's your sentiment on the Aussie US? If you want to know anything about sentiment, Emmett, go and have a look on the website. You've got a bias scorecard there, which will tell you the overall fundamental directional bias. And you've got the fundamentals for the Aussie and the US there. And you've also got a combined sentiment here, which will give you the retail sentiment directional bias as well. So you can make up your own mind. So Aussie US at the moment is no bias whatsoever. COT are short. Retail are slightly long on it, but that's about it. So no bias really. I love this SIHEA. It's profitable fun. It is profitable fun, isn't it? Profitable fun. That's a good way of putting it. It wasn't profitable fun yesterday, was it? Yesterday was profitable pain. Still made 6%, but it was painful getting it. It's not always profitable fun, is it? It's sometimes hideously frustrating fun. Seem to be getting a bit of a mixed reaction. Sorry, bear with me 1 sec. Right. Somebody at the door, but it's not important. I came out with a profit yesterday. Yeah, that's good. Yeah, so we seem to be getting a mixed bag at the moment on this. This terminal's frozen again. I really need to sort this terminal out. So indices basically not really dropping hard, and you can see they're buying it back up again. So I suspect the US dollar is obviously doing the opposite as well. Just rescan the servers. Why this server does this? With this account, it's this ECN account. It's just shocking. Okay. So US dollar CAD has just hit ADR to the upside. Euro US dollar 125 ADR now. So good strong move, but we'll see if it holds up. So let's have a look at the ADRs while we're talking about the ADRs. Mike's House of Mods. Purchase your opening main GEA are the set files that are on your MQL5 page, the latest. Yeah. I'm not one of those people that changes the set files because the market conditions change and I need to curve fit them to show you a profit. Basically, it does what it does. Yeah. People that supply updated set files are basically rerunning their EAs through the strategy tester over different time periods to find something that looks more profitable than what they published before, which is obviously curve fit because that's never going to happen again in the future. And they're just giving you that to placate you because you'll put that in the back tester and go, oh, wow, that's much better. I can give you a set file that is going to make you 100 million over the last 3 weeks. It's not going to make you 100 million moving forward because I'm just going to make sure the settings are right for that time period. So I don't release set files are set files. They demonstrate a strategy. Whether that strategy works or not is down to future movement in price. I have no idea. No one does. So I don't update set files. Set files just execute different strategy criteria. These look heavy. It looks like this US dollar move is going to carry on. These indices look really heavy. So I would suspect that's probably going to carry on going down. So let's look at these ADRs. Aussie dollar CAD, we've got an ADR hit to the upside. Canadian dollar is probably going to weaken if this oil continues to go down. So we're running into what should be a decent support area here. So hopefully this will hold and rally back up again. I'm toying with the idea of adding another one down here. 27 is ADR. 21. I'm going to add one more down here. When we get the reversal alert. So let me just move that up a little bit. Just above that propulsion gap. So basically we've got this little low here that we've just put in. That's the propulsion move through that low. So when we break through that propulsion gap, i.e. and we also get the reversal alert, which is currently there, I will add the third on, which will bring the average down. In the hope that this is the support, because this has come down a lot further than I was expecting it to off of this structure here. I was expecting a higher high. What we've actually got is a lower low. So this is potentially that reversal alert there is holding for bearish market structure. Look. I don't know. So Aussie dollar CAD will be weakening because the Canadian dollar will be weakening off of the oil move. That might also, the Canadian dollar, get a little bit of a rally now because of the US dollar news that we just had. So we'll see. But that's a nice ADR hit to the upside. We've got a lovely resistance coming up. That's a 2-weekly high there. So this is the high there and the high there. So this is 2 week ago's high. That's 3 week ago's high. Previous level. Yep. So this obviously is an area the price is not interested in going through. We're approaching that level again. So we'll be looking for another bounce at that high. We've had a big, strong push. We're getting extended on our RSI. So they'll be looking for a profit take move off of this shortly back down into that propulsion gap. So ADR is a good area to start looking for entries. So support rectangle held up nicely there. Look, brought it back up again. So as soon as you get a reversal alert on this one, I'd say that's a good looking short because you can get in on that reversal alert. And if this is where they're going to start the move, great. If not, you can add a second up at 150 ADR. So looks good. Aussie dollar, obviously, thing you've got to bear in mind if you're going to take any new trades on the Aussie dollar is tomorrow morning at 1:30 a.m. UK, we have the CPI figure. And the CPI figure is forecast to be bullish. So that would be bullish Australian dollar. So shorting the Aussie dollar just ahead of CPI is obviously a little bit more risky than normal. If you look at where it's going to break out to, if that CPI figure really rallies the Aussie, you're not really going to look for any resistance until you get up to that monthly high. Potentially there, you got this propulsion move to the downside, which was tested. So there's that resistance, there's the resistance there, and there's obviously the ultimate resistance is the monthly high. So it's pretty safe, I think, to get in there. If you need to scale in, there's 3 entries there, isn't there, before it comes back down. And if it gets all the way up to there without stopping, that's going to be way up there. They're going to profit take the whole move, and you get a nice 50% retracement down into that high there. So looks pretty good. But obviously, if the Aussie dollar figures come out as negative tomorrow, we'll be going back the other way. So it might be good to get into it today, but that's the planning. Yeah. So get into it, plan for that. If you get that, plan your scale into the position. Indices are pulled back up inside ranges. So we're back up inside that initial range. So we haven't gone anywhere yet. It looks like that US dollar move is potentially failing. So that's the news. We've already retraced 50% of it. So we'll see where we go, but not particularly strong move for the US. As I say, every time we get positive news for the US, we get a bit of a spike and then fizzle out. Every time we get negative news at the moment, it collapses. So that's really good news, good figures. which would indicate CPI going up. And as we know at the moment, CPI for the US dollar is static. So that would indicate that we're going to get a plus figure here, which is going to put inflationary pressure on them putting another 0.25% on. Same as we've just had from the pound. They're also thinking now we need another 0.25%. Bullish. But market's not interested in buying at the moment, is it? So we'll see. Aussie dollar Swiss. So that's hit ADR. To the upside, you're just about to get a reversal alert on that. In fact, you've already had one on this. So there's your support rectangle at the moment. You're just about to get a reversal alert in a minute. You would have had one, though, there on that candle. Just. And then it dropped a little bit and then invalidated it with the new high, which is why you got the second entry there. So that is your M pattern potentially forming there. So when that triggers, we should start a move down, hopefully. Aussie dollar Swiss. However, Swiss franc, obviously, as soon as we get any kind of news about the war, off we go. Swiss franc gets bought up. So that could come down very, very quick. But obviously, again, this is Australian dollar. Potentially, this is them buying into the CPI figure tomorrow. They're expecting it to increase. So they're buying in and pricing in an increase. If we don't get that, that will be quite a big drop. If we do get it, it will probably continue the move. So just be wary, obviously, of shorting against potential forecast positive news. Stock indices are rallying quite hard. So this US dollar move being completely undone. So back out the highs, testing new highs. We PL'd open, but yeah, that's Aussie Swiss. Aussie New Zealand is also in ADR today. Big strong move to the upside, as you can see today. Absolute theme train, this Australian dollar. We've had two tiny little sell orders come in. Apart from that, it's just been buy all the way. So again, pound odd, that's 150 ADR. That'll be a hit to the downside. Yeah. So this Australian dollar absolutely screaming away today. So they are buying into the CPI figure. Not great if you are short on the Australian dollar like I am with the Aussie New Zealand. But it is extended. So good chance we might get a pullback on this. So if you want to take an ADR reversal, these tend to be intraday scalps. And then you can turn them into position trades. But you will have had an entry on this one there already this morning when it got above ADR. So that would have been an entry there. So you would already be short on it if you're using 100 ADR as your reversal. Euro odd. Time to get moving, my watch says. Not convinced, is it? Euro odd extended to the downside. So this is almost getting down to an RSI extension, ready to go long on this one. But just be obviously wary of what we've got coming up news-wise tomorrow. Euro yen, that's extended to the downside. So the euro today, not having a great day, as you can see. It's down across the board, apart from against the pound, which is down even worse. So yeah, euro yen has come down. So that's an ADR hit to the downside. You've already had the 5-minute reversal alert. No, you haven't, actually. That'll be your first alert today on that one. We just tapped straight into ADR, look, bounced off. Euro US dollar, we just looked at. That's obviously down at 125 ADR. That looks like a weekly support level we're coming off. Yeah, so that's that old 3-week high. Again, potential bounce there. Not great, though. I mean, it's a bit of an unclean support bounce, that. If you look at it, it's this area here, basically, is what they've tapped into. But I mean, it's just a mess. The euro US dollar and the pound US dollar at the moment are just a mess anyway. Pound odd, big extension. Obviously, the pound is very, very weak today. The figures this morning for the pound manufacturing, again, positive. gone totally the other way. Market not reacting in the way that we would expect it to. The claimant count was negative this morning as well. So pound's been trounced today. Australian dollar is rallying like a lunatic. Hence, obviously, this one is just coming down at a rate of knots. Potential support area here. There's a tiny little wick there, but that's more of an overnight candle. So I would say realistically, you're looking at 225 ADR. So if you enter there and enter there, that would be kind of perfect. Or if you just want to wait until you get down to there. So if you want to get in and hope that this pulls back on this move, we should be able to get back up into that propulsion gap potentially today. And then obviously it will go that way or that way on the news tomorrow morning. The pound US dollar, that's pulled back into propulsion. Very, very glad I got out of this yesterday. Mistimed it by half an ADR, but that'll do. This is what I was worried about yesterday, which is why I got out when I got out yesterday, because I was worried about this pound not holding up. I don't know what's going on with the US dollar at the moment. It's very erratic. So this could go either way, couldn't it? But we've got obviously news just come out for the US dollar, which is bullish, and it doesn't seem to be particularly interested in being bullish off the news, but we'll say wait and see, give it a bit of time. But that's an ADR hit to the downside. So 5-minute reversal alert is going to be there. You can look for half an ADR, half an ADR, third of an ADR profit on it. US dollar CAD, same thing, hit to the upside. This is a lovely resistance bounce. So that weekly level last week, we pushed up into it again and again. So this is holding very, very nicely at the moment. However, if we're going to get this continued weakness on oil, this could easily squeeze out the top. Jesus, look at the state of these indices today. Absolute railroad tracks. Just no idea. No idea where it's going at the moment. It's confused.com. Glad we got out of it today. We were lucky to get out of it with what we did, I think, today. US dollar CAD, so that's an ADR hit to the upside. Lovely resistance there for potentially continuing to hold this accumulation that we're in at the minute. So see if it decides to break. If you get out of those highs, I would think twice probably about taking a short, but the reversal is actually miles away on this at the moment. So if we put in a new high here, the reversal rectangle is going to drop down onto this candle here. And that's the area that you'd be looking to, there we go. So when that updates, there's your support rectangle now. There, so that's your low that you're going to look to break. However, US dollar's rallying again. Very schizophrenic today, isn't it? All over the place. So we are getting more strength coming through. Indices coming down again. I'm only laughing because I'm not in it. It's nice not to be in it when it's being like this, because when you're sitting in it, it's like, make your mind up. There will be people all over the world now going long, stopped out, short, stopped out, long, stopped out, short, stopped out. Okay, I'll go long. Yeah, they're already 4 or 5% down. Painful, painful. When it's like this, it's just walk away, leave it alone. It's not interested. All it's going to do is kill you. Pound US dollar, we've looked at obviously US dollar CAD. We know that's extending to the upside. That's just about to hit that weekly level. So if we break through that level there on the US dollar CAD, you're looking at moving up to the previous week's high, which is 175 ADR. So if we can push all the way up to there, you should get a nice pullback into this area here. But we may well just butt this level and come back out again. Candles on the indices are going green again. This will come down again. I'd just stay out of this today, to be honest. This thing's got no idea where it's going at the moment. US dollar Swiss, nice ADR reversal, just gone in there. Beautiful rejection there. But again, this is US dollar, so could go either way, couldn't it? So there's your ADRs. RSIs, we had loads of RSIs this morning, 4 hours. They've all kind of undone and played out today. So the only thing we've got extended now on the 4-hour time frame is this Aussie dollar, New Zealand dollar. Big extension to the upside. I've got multiple shorts on this already. Actually, I've only got 2 shorts on this at the moment. I will be getting a third today. 57. Oh, no, I won't. That's a bit too close. But yeah, it's pushing up at the moment. So I've got 2 shorts on this at the moment. It's a 4-hour RSI extension, but it was a 4-hour RSI extension last week. We haven't pulled back on this yet. So all we've done is just accumulated and broken to the upside. So there's potential for this to rally further tomorrow on the news, obviously. And if it does that, then I'll be entering more positions. But we've got this level coming up now, which is kind of like the point of no return. This is the high from last month and obviously the month before. So that's all within kind of half an ADR of where we are at the moment. So if we get to this level, I suspect we are going to find some limit order triggers up here. The danger, obviously, is it just pulls back into that accumulation and then gets another leg up and we break that high and off we go. So it's either going to do that or it's going to do that. So we'll see what happens. But these monthly levels, this monthly level here, is where I would be looking for a short on that one. If you're going to add into it or you're going to get into it for the first time. Other than that, the only other things we got extended are hourlies today. Aussie dollar CAD, that's an ADR hit, extended on the hourly. Nothing's extended above the 75.25 levels, which is the areas that I look at from first entries. So not quite there yet on Aussie CAD. If it does rally up into that high, though, I will be. Aussie dollar Swiss. Again, extended to the upside. I've already got longs on this one. So what I'd like to see is that one just peter out and then put in another leg, which is potentially on the cards if the Swiss franc is going to continue to weaken because the conflict isn't kicking off, because all this money that came into the Swiss franc as a safe haven run because of what's going on with the Middle East. Middle East is not petering out, but the ground invasion is being stalled because they've now said they're going to negotiate for hostage releases. So it's going to be a much slower process than we anticipated. So therefore, I think probably we might get scale outs on these Swiss franc moves, which would be lovely if we can get back up to there by the time the war kicks off. US dollar is coming down, I would suspect. Stock indices gone straight back up again. Look at this. What an utter mess. Look at it. Now everybody's going long. Yeah. What do you do with that situation? Do you hit the sell button right now and assume that we're just going to go back down there? Because that's what we've done for the last 25 minutes. It's just impossible, isn't it? Impossible situation today. So Aussie dollar CAD we've looked at, Aussie dollar Swiss, nicely extended to the upside. But as I say, I'm already shorts on that one. But nothing to say that I'm, this could easily come straight back down from where we are now back into this accumulation. So if this is going to hold this double bottom, there's your reversal alert and retest. So I'm looking for a pullback, new leg up. So it should come down from here. Anyway, Aussie New Zealand we've already looked at. That's also extended on the hourly, and Euro odd extended on the hourly to the downside. So if this continues to squeeze further back into this propulsion gap and back into this accumulation, I will probably be able to get a long on that today. But we'll see if it continues down. It's got to continue down. We need more sustained strength on the Australian dollar. So there you go. There's your ADRs. There's your RSIs all covered. There's quite a few opportunities there. A lot of it is Aussie dollar related, which is obviously fairly risky to take ahead of the CPI figure tomorrow. So we'll see. See where they go. Afternoon, Ismet. Afternoon, Kennelly. Running late. That's okay. We'll let you off. Swiss yen, you want to have a look at? Ismet? Swiss yen's not going anywhere. 3 days sideways. So nothing to report. I'd be looking for shorts on it at the moment. Well, I would be short on it at the moment. I'm not. I've got at the moment the EA is turned off on all yen pairs apart from US dollar yen because I've got short exposure on the US dollar yen. So I don't want to overexpose on the yen at all because of what's going on with this 150 move on the yen. So we are totally, as you can see, totally stuck at 150. I've got 3 shorts on this, which obviously the initial intervention move, I was anticipating a continuation, which we haven't had. So we've had 2, and now we're into our 3rd week sideways. We've been stuck sideways since we rallied up into the 149.50 level for 1, 2, 3, 4, 5, 6, 7, 8, 9 days now. So this is basically 2 entire trading weeks where the ADR has been less than 75% of normal movement, and we haven't gone anywhere. It literally cannot move, because if they push the US dollar above that level, the Japanese will intervene. If they start to drop it, all yen pairs will power up and it will collapse the US dollar. So they are absolutely stuffed and stuck at the moment on this one. And I'm not going to add any more yen exposure on short, because if you look at the previous intervention moves that we've had, there is a chance of a grind for a few weeks like that, which means that all yen pairs would go into drawdown if you're shorting them. So I'm not adding any more size on at the moment for the yen, but yeah, it's stuck sideways as the others are. So we've had this gradual grind, but that was the first entry short on Friday last week. So I would be looking for a pullback on that move, probably down into that propulsion or down into there. Depends how aggressive you want to be. These things, this is a joke. Absolute joke today, look. Look at it. I haven't seen a market like this for such a long time. Just stuck. It's like rabbit in the headlights, isn't it? I really would love to see this candle paint like that. It's going to do it as well. Look at that. Green, black, green, black, green. Just keep selling it there and keep buying it there. The algorithms have basically got stuck. Bizarre. Absolutely bizarre. I'm just so glad I'm not in it. Chihuahua driving a Porsche on cocaine. Exactly. Yeah. Have you seen all those? There's so many films coming out at the moment with animals taking cocaine. Like, we've just had Cocaine Bear come out, and then I was looking on, I don't know what I was looking at, but there was something else that had cocaine in it as well. Scott Dyer has just sent me a new Swiss yen buy order at 167.57. So buy order's just gone in at 167.57. TP at 167.96. These are obviously scalps, aren't they? Yeah. Signal chance of success, 84%. No, Scott, I'm really sorry. It's not 84%. It's 50%, because it can only go up and down, and that's binary. You can't have an 84% chance of the signal being successful, can you? It either is going to work or it's not. There is no other percentages available. So this is a scammer that I blocked out the group. He's messaging me now because he wants me to see his signals. So buy the Swiss yen, everybody. What was I talking about before I got that? So we're driving a Porsche on cocaine, yeah. So Cocaine Bear, and then there was some other animal to do with eating cocaine, and I can't remember what animal it was, but I think it might have been a wolf or something. So they're making all sorts of films at the moment where they're feeding animals cocaine, which I don't agree with, but... Euro Swiss, Chris. So Euro Swiss is a tricky one because the Swiss franc moves with the euro. However, when the emergency button is pressed, the Swiss franc just kills everything. So at the minute we are in emergency mode. We're in massive fear mode. We haven't had the fear and greed index yet today, but we are in fear mode. Yesterday's fear and greed index will come up in a minute. There we go. with fear, and we're dropping as well. It was a 30 the day before. We're now at 28. I suspect today we might be a 25. We haven't had it yet. So yeah, I would. There's a good chance that we might get another rally on the Swissy. However, it's all pulling back at the moment. But as you can see from the Euro Swiss, this is dropping, which means as the Swiss franc is weak, this shows you how weak the euro is. If the euro is dropping against the, so that's weak. That is weaker because it's coming down. So we're coming down into potential support here. We have broken back to the upside and retested. So market structure is long. We're coming up into a resistance area here, which is these propulsion gaps. So I would say at the moment, it's more of a little bit intraday buy, just to see if we can get up into these propulsion gaps. But equally, we could come and retest this area and buy back out of that area. But it's not extended enough in either direction at the moment for me. It was extended yesterday. That 5-minute reverse alert you would have had yesterday in there was the one to take, or the one this morning, which was there. But right now, I don't know. It's not extended in either direction, and it's pretty much forming a range, which we've been in now for 6-7 days. So you're coming down to mid-range. So whenever you're buying in a range, it's always best to buy from the highs and the lows, because your odds obviously of success are a lot higher, because you're going to have limit orders triggering at both ends, which will obviously help the move. So if you're going to buy mid-range, you are assuming, or if you're going to trade at mid-range, you are assuming that the last market structure low is going to hold, because you will be looking for a leg back up into range high. But it's always riskier buying from mid-range, because there's much more chance of either of those happening. When you get down to there, there's more chance of that happening, because the market will be extended when it gets there, ready for a pullback. And you'll have limit orders triggering at the lows, helping your trade to work. It's not really any option that looks good there at the minute. I'd be buying it though, but probably wait until we get into that propulsion gap so that these guys can help you along the way. Very, very skittish at the moment. How do I set retest arrow to show on market reverse alerts EA? You need to use retests. So on the market reverse alerts EA, it will only show you what you're using as your inputs. It's not an indicator, it's an EA. It's designed to trade. So it's not a visual tool at all. But it's, if you want to see retests, reverse alert retest, you set to true. And draw retest arrows, you set to true. Regarding the yen, could it be a situation like the Swiss with their decision to stop backing? Stop backing? I don't know what you mean. I don't know what that is. I don't know what that is, that Swiss thing. Basically, all yen investments are overseas. So if you mean by stop backing them not investing overseas, that would only create massive power in the yen. I don't know. XR update news. Been here, forgot to say hello. Hello. Julio. Just purchased the SIHEA and wanted to know, how do I get the SIH dashboard? There isn't a dashboard, it's an EA. Can the SIH EA be back tested on other testers like Soft for FX? Don't know. No, because isn't Soft FX, isn't that an EA? You can't backtest an EA on an EA, can you? You can backtest indicators on an EA, but you can't backtest EAs on EAs, as far as I know. I don't know. Read the instructions on that backtester, I would say. I've no idea. I can't answer that question. Don't know. January 2015, the Swiss National Bank stopped to back its currency, which led to the massive dump. No, that wasn't the Swiss National Bank. That was them removing the cap. That's a totally different thing. The Swiss franc was capped. The yen is not capped. Pegged, sorry, not pegged. Well, cap is a peg, but the Swiss franc was pegged, which is why that move happened. They removed the peg. So it became its own entity. It was like a puppet being driven by the euro and the US dollar. And then all of a sudden they cut the strings. So the Swiss franc just went because it had nothing propping it up. The yen is a totally independent currency. But the way that the yen operates, the reason you have these different differentials on the yen. So you look at the yen, the interest rate is negative 0.1 and has been for 6 years. And it hasn't changed for 6 years because they openly discourage investment in the yen. Every single penny that the Japanese government and central bank owns is invested outside of Japan. So basically they say, if you've got money in Japan, you do not stick it in the bank. We don't want you holding the yen. We want you sticking your money externally, other places. So what that allows them to do, and it's the only country that does this, because they have all of their money and their capital tied up in the US dollar, the euro, the pound, the stock market, everywhere, in bonds, everywhere else. It means that at any point in time, they can basically sell all of that, liquidate it into yen, and strengthen the yen with a massive, strong push. So they have the ability to intervene and manipulate the price of their own currency. Yeah, hence that move there. That's an intervention. So it basically, it's them going, right, sell all US dollar investments and buy the yen. So liquidate all of that US dollar and put it straight into the Japanese yen. And you get that massive spike. What that tends to do is upset the market, completely liquidate all of their positions, make massive losses, and force them to go, all right, sorry, we will buy the yen. And it creates investment in the yen, which powers the yen up, which makes all their import-export business more profitable. And that's how they tend to go. But it's always short-lived. And this is why the Japanese markets just rallied at the highs. Trying to on the NASDAQ. Those two have, though. And that's why basically the Japanese yen is so trendy most of the time, because it's either being manipulated and bought to crap, or it's weak as hell. There is no in between. There's no, like everything else, we get periods of balance. This thing's just a lunatic all the time. So when you go back and look at the previous intervention, October last year, February. What are we doing in 2017? So when you're going back and look at the last time we hit this level, we had an intervention which failed, and a second intervention which worked, and then a third intervention which hammered the yen home. That's what we've just had. However, this time they decided to execute it at 150, which is where the second intervention came last time. So, and this one failed in the way that the first one failed. So there is danger for this to push higher. But because they've executed it at the price level that they said initially they didn't want it to happen at, it's difficult to see when the next one will come. But as soon as it gets above that 150 level, it's uneconomical to operate. So they have to do something, and it just means liquidating. They have to liquidate. Or the other thing, which is what they have talked about, is for the first time in 6 years, actually putting a positive interest rate on, which will power up the yen, because businesses will suddenly start to pull money back in to the country and power up the yen in that way. So they've talked about potentially doing that. But the Japanese never tell you anything for certain. None of the central banks do, but they are much more tight-lipped about what they do. So, so when you look at every FX pair, they are all kind of like ticking time bombs, because yes, they may look lovely and bullish, but at any stage they can collapse, because if that yen power up happens, you're going to get a big move. Every single yen pair is just going to collapse, because nothing will be able to withstand the amount of selling against its own currency when they do it. So we got the intervention we were expecting, but we didn't get the follow through. So big question mark on all of them at the moment. I don't even know why I was talking about that. Nobody wants to ask about that. Why did I start talking about the yen? I have no idea what I'm talking about. Oh no, yes, we were talking about the Swiss franc peg removal, weren't we? Yeah. Why? Would a divergence scanner dashboard be something you could program? No, just go and use one that's already out there. There's loads of them out there. Retail position indices liquidation sale today. Yeah, looks like it. Hey, come and trade, they said. It's fun, they said. It's really easy to make money, they said. Holy crap, I've just lost 10% of my account, they said. Yeah. I'd love to go. I might go and have a look around some of the Discord and Telegram channels soon after the stream and just see how many people are crying. They'll be silent. They'll all be silent. They'll all be complaining about the banks and institutions and how it's all manipulated and it's designed to rip them off. That's what they'll be doing. None of them will be going, it's my fault because I saw that price was just a complete lunatic and I should have left it alone. It's all the bank's fault. Always the bank's fault. I love it. Alistair, correct. Indie only. Don't know what that was about. But yeah, if you want a divergence scanner, you know, divergence in what? There's divergence. Every oscillation indicator can have divergence. There's divergence right there, right now on the Swiss yen. Yeah, that's bearish divergence. You know, you see, you know, there's a nice divergence there. But you could have divergence on the MACD, CCI, any oscillator has it. So which one do you want to use? And how do you want to set the divergence up? It's completely useless. Aussie dollar CAD 125 ADR. Still pushing the Aussie. Divergence, in my opinion, is a good confirmation situation or a confirmation condition. It shouldn't be used to find trading opportunities because it can be completely fine-tuned. When you use divergence within an indicator or a dashboard, you have to set a volatility on that divergence. So what it will do is it will say, the way all divergence is saying, right, price is here, the indicator is here. Go back, look back in time through these candles and find me a point where price was lower and the indicator was higher, and signal divergence. You have to tell the indicator how many bars back to look. Because you can configure that indicator to look back a number of bars, you can fine-tune this to paint beautifully and show you every opportunity where divergence worked like a dream. So you're curve fitting the indicator to look back and say, yeah, that setting looking back 26 candles is what gives the best divergence on the chart. What has that got to do with the future? What has happened in the past has nothing to do with it. So if you take that divergence setting of 26 or whatever it may be that you've got working perfectly there, and then you scroll back through to here and look at it, you'll probably find actually the 22 look back is the best one for divergence here. So what do you use, 22 or 26? Because 22 worked better this month, 26 worked better that month. So go back and look at another period of time. And now the 7 works better. So what do you use? So let's go back out and look over a bigger period of time. And the 18 is the best over that entire period. So let's take an average of the 18. All completely different. So what is going to work in the future? No one's going to be able to tell you because it hasn't happened yet. So every divergence indicator, every indicator on your chart is always showing you what the best scenario was in the past, but it isn't going to help you moving forward. It's going to give you a reason to get in, and you can use whatever you want to, but what you will automatically do as a human being is fine-tune it to look the best in the past. It doesn't help you in the future because these conditions aren't the same in the future. They're different. All different. Look at the volatility here. Yeah, we moved a total in that month of 260 pips. In that 3-week period, we moved 370. 50% more movement there. You're going to get a totally different reading on indicators here as to what you would have had here. So if you fine-tune all your indicators and make your system and strategy perfectly work over that, it's going to fail miserably there. No point. All they can do is give you an indication of what's happened in the past, and you can look for those things to happen again in the future. But divergence isn't a signal. Divergence is it's like RSI. It's a condition. It's showing you that price has moved further than the strength or the CCI or the MACD or whatever it may be. All it's doing is telling you there's a condition in the market. You need a signal to get you in, obviously. So you could use a MACD or any divergence indicator with market reversal alerts indicator, for example. So there's a lovely divergence there that worked beautifully. But the look back on that divergence you would have had to set would be 70. If you were using a 26, you wouldn't have had a divergence signal because the divergence signal would have been there, and that's not divergence. That, however, there, that is divergence. That isn't. So the indicator signal of 26 and the indicator signal of 70 gives you a trade opportunity or not a trade opportunity. See what I mean? This is why all those EAs you see on the marketplace that look absolutely amazing are amazing over that period of time because they're curve fit for that period of time. You pick that up and you put it over there, it doesn't make any profit at all. Different situation. Euro odd, this Australian dollar is off the scale today. Euro odd is now 175 ADR, still coming down into propulsion. So good opportunity for buying here. 6% of the time we get beyond this level. So it's not often we get 175s. And obviously watch this area here. 200 ADR for a bounce. Potentially as well. How do I get the Indices trade manager? What you mean the dashboard? This is just the trade manager dashboard. So all this does is displays your history. This is more for position trading. I'm using it here just to keep track of daily profit. But it's basically what I use for position trading. Manage my drawdown exposure. So that's a trade manager dashboard. That's on the website. There. You don't need, I mean, it's for stock index trading, for scalping, you don't really need it. All this is doing here is displaying your live data, yeah? So you don't need to get this if you're just scalping, because all it's doing is it's displaying this information. So the account history here, all this stuff is here, yeah? And your live trades over here, everything that is running live is here. But it's put, I mean, you can't make head nor tail of this, because it's, you can sort it by time, you can sort it by profit and all sorts of stuff, but it's just useless. Doesn't tell you how many positions you got on or anything. So what I did was I built this to display that in a form that actually makes sense. How many trades have I got on? How many lot size? What's the drawdown at the moment? What's my overall profit? How much is each position in? Where's my exposure? So what this is really designed for is position trading. So if you're not position trading, you don't need it, because all it's going to do is display this. And you can see this very neatly when you're scalping here. I mean, it's a nicer way of viewing it, obviously, but it's not necessary. But up to you. SoftFX does not do EA, no. Because it is an EA. So and it's an EA that runs in the strategy tester so that you can test indicators. So it's designed for you to manually trade, isn't it? So you can, it's like the trading view tester thing. Because MT4 hasn't got that. But yeah. Right. I'm not here tomorrow. I'm off. I've got tomorrow off. So I will be letting the EA run tomorrow. I'm going to let it run on full auto. Scary. So I'll see how it does. But I'm not around tomorrow at all. So there won't be a live run tomorrow, but back again on Thursday morning for 7:50 for the Frankfurt session, and obviously 2:20 for the US session. Indices trying really hard to drive out the top here. So we've made that much progress basically from the initial open, pretty much. So we are driving higher, which indicates that this US dollar is dropping. So that all that lovely positive news. If we look at what is strong at the moment, the pound's weak, US dollar, the euro's weak, Aussie dollar's strong. It's very difficult actually to see what the US dollar's doing, because everything is really screwed at the minute. Can't really tell, can you? So yeah, basically it's not particularly strong or not particularly weak. If you look at the US dollar Swiss, that's probably the best gauge at the moment for what the US dollar's doing, and it's pretty obvious. Look, no bloody clue. Exactly what we've just seen on the indices, isn't it? Market's not got a clue. So overnight, be aware, obviously, of CPI on the Australian dollar. The market is certainly buying the crap out of the Aussie at the moment on these positive forecasts. So they are factoring in what looks like a positive move. So we should probably get an accumulation towards the end of the session. And then obviously, if we get that positive figure overnight, we should get a nice big rally in the Aussie and the New Zealand dollar. So any Aussie and New Zealand exposure you've got is going to be affected tomorrow, but we will see which way, depending on what the news comes out as. Tomorrow morning, you've got German IFO, because I won't be here, so I'm just running through this now. It doesn't tend to do an awful lot. We can get a bit of volatility off of it, but it's not particularly a leading indicator. The main news tomorrow, obviously, is the Canadian rates. So they're coming out at 5, which I don't think is going to be any different. We should get a 5. So we will see what happens with that. But the press conference at 4 o'clock is what is going to really drive the market tomorrow, because when we know what the forward guidance is, i.e. whether we're going potentially for a 5.25 or they're going to stall at 5, that will give us strength in the Canadian dollar or weakness in the Canadian dollar. So that's really where you're going to get the news tomorrow. We've got Lagarde speaking later on. We've got Powell speaking tomorrow evening, and then Bullock speaking again. There's obviously some conference on somewhere. Bank of Greece. He's in Washington. She's in Canberra. So they all just happen to be talking in their own countries. But they're all talking tomorrow. So potential overnight volatility there. And then we've got the euro rate on Thursday. So I'll be back for the euro rate as normal. But just keep an eye on everything tomorrow, because it's a really busy day tomorrow. A lot of news, a lot of volatility expected tomorrow. So We'll see what happens. But I shall be letting the stock index hedge run on full autopilot for the first day tomorrow. In fact, I will actually be around tomorrow morning. I'm not leaving to go out until after the open. So I will actually be hovering tomorrow. It's just I've got to leave fairly early, so I'm not going to do a session. So I'll be back Thursday morning, 7:50 a.m. for the Frankfurt session and 2:20 p.m. for the New York session as normal. If you need anything, I'll be in Telegram as usual. Yeah, hopefully tomorrow goes well. But anything you need, let me know. Otherwise, I'll see you guys on Thursday. So have a good day.